Good afternoon, everyone. Today is the 1st of July, Tuesday. Getting ready to move into the 4th of July weekend. We are looking at the SPY chart. This is the, let's call it post plan your trade video. Looking at the cycle patterns and the other research that I do to try to continue to help you without showing you the future cycle patterns. So what happened today was we had on the SPY cycle patterns, I've shrunk everything down to show you right here where we're at with the cycle patterns to get us into this area. So this is just today. And today we had a gap reversal in counter trend mode. Now, I've tried to talk to you guys about this, how I look at trend. I look at the last 3 days up, last 5 days, last 5 days up, last 7 days up, and basically last 10 or 11 days, which would be over here, up. So look at all these moving up, general trend moving up. So a counter trend gap would be to the downside today, which we got a gap at the open. Didn't really break down very much, but we did get a bit of a breakdown. So now we're looking at where the market is going here. So far, after breaking up to these new all-time highs, we're kind of forming a little island setup right over here. At least right now. We are obviously still bullish. I'll try to make that as clear as can be so that everyone can see that we are still bullish. Okay, bullish, bullish, bullish. There's absolutely nothing telling us that the markets are going to go down right now. Obviously, my predictive modeling and other things might be telling us something different by trying to look into the future, but we're just focusing on looking at the technical analysis here. Now, what I can tell you is that, we do have this kind of big, broad excess phase peak pattern here that is still playing out. And again, we have this big, broad excess phase peak pattern that's rallied on up, rolled down into this consolidation phase and into this consolidation phase. Now, remember, we had this excess phase peak pattern here that rolled to new all-time highs, breaking the ultimate high back over here before breaking downward. Now we've got this big broad excess phase peak pattern breaking the new all-time highs. Are we going to get the same breakdown? I don't know. I would tell you that at this point, it kind of depends on what happens over the next 5, 6, 7, 10 days. But I can tell you that, a rejection up at this level could be fairly dangerous with a pullback back down into this 560 level. And remember, that 560 level, if we keep pushing this all the way up, the Fibonacci level, now we're looking at 550 to 566. So that puts us right down in that area. And that puts us here, 550 to 565. That would be our potential downside target range if we were to get some sort of a big breakdown. Okay, really trying to come down here and close this gap. This little gap right here. That little gap is very, very important in my opinion. If we get a breakdown, we're probably going to try to close that gap, moving down into this 382 level, which is a Fibonacci level, obviously. Okay? So now gold, boy, what a rally. Breaking down a little bit here on a pullback. This is fairly common after a big rally in gold. But remember, the gold cycle patterns were a rally. We had a counter trend rally yesterday. Then we had a rally and carryover trend today, rallying strongly to the upside. Very solid upward acceleration here. I mean, really just kicking kicking straight on up. Now, I will tell you that I do believe gold has a chance to rally back up here, this 3420, 3400 area, pulling something like this, kind of an A, B, C, D, E rally up into that area. That I think could be a very solid move before the 4th of July. Silver, I'm waiting on silver to try to break back above this 36.85 level, and we haven't seen that momentum yet, but I think it's coming. I really do. So we'll see. Silver, if gold makes a big move, silver's going to try to make a big move as well. Okay? Just that's the way it is. I'd like to see silver up in the 41, 44 area, but that's not happening yet. Okay, now let's go back over here and go to Bitcoin. Bitcoin had a pretty big daily move. Let me spread this out and show you. Wasn't huge, but it's topping out just like I predicted. Rolled down pretty hard today. Was off, let's see here, from the open 10,000, 107, 170, 105, 7. So that's almost 1,500, $1,600 to the downside. Kind of cool. And obviously, look at how the topping pattern I told you, 106, 450 to 107, 450. That's right over here. A little higher, got up into 108s just a little bit, but broke down pretty hard. And Bitcoin, the new Bitcoin cycle patterns were indicating a crush pattern in a big breakdown mode. So a crush pattern in trending, bullish breakout, crush patterns. I've told you before, crush patterns can be very big. It's not as the biggest one I've ever seen, but good, solid crush pattern to the downside. And again, now, if my research is correct, this rejection, failure to make a new high up here, means that we're going to probably start to come back down. Area these. Probably start to come back down into this mode, trying to test the 50, 60% area here. Maybe get all the way back down into these lows and try to break down into this lower channel here. That's a pretty big move. That's down to 97, 98 thousand. And like I said, it's a pretty interesting type of scenario. Now, on top of that, we're getting some twinning patterns. Now, I've talked to you about this new twinning technology, and I'll draw this out here a little bit, but it's pretty simple. You go from a low to a high, as long as you can see, at least the way I do it, and I'll change this color. I look for nearly equal size ranges. So we have this range set up here. One of the rules of the twinning pattern is that we have to get at least a 50% pullback. So you come over here, you figure out where the 50% is, roughly here, and we have to get a 50% pullback. Okay, I'm a little high. And then if we do, and we then set up another twin pattern, roughly the same cycle move, which I designate as roughly 3/4 of this original move to maybe 1 1/4, meaning up a little higher, then this sets up a twin. So we have number 1 block, and we have number 2 block. Now, we got a little lucky here with what's called a late child pattern. Think of that as the unexpected child that shows up and says, hey, I'm here. Okay. That's what we have here. Setting up right over here. Now, obviously, each of these levels has that 50% range. This is almost identical to the previous one. It's a little lower, so I'll set it right here. And then we have the new one coming in here, which is going to be probably down in this area. And remember, when you point to a box, it draws these midpoint levels. So these are right at 50%, guys. It's an easy way to find your 50%. So at this point, we have the lower high, lower low, lower high, lower low, lower high, potential lower low setting up. We have the late child pattern. We have the breakdown move right here below the previous number 2 block. This indicates that a breakdown is fairly likely. And this would give us some pretty good confirmation that, we're looking at the potential for a move down here, maybe back down to this low that was set up right here. And that's a pretty good confirmation of the twinning patterns setting up. So, this probably already plays into other types of technology or analysis with the twinning pattern, but it's pretty interesting to see. So anyway, guys, what we're looking at is a pretty good breakdown in the market. The S&P back over here is island topping, very interesting little formation, and of course gold and silver pulling back in an accelerated rally phase. We'll see if this gets any big momentum for a breakaway going into the holiday. Okay, guys, like I said, trying to help, but not trying to show you the future patterns because that's really for my subscribers only. Okay, guys, that's it. Talk to you later.